This is Martin from Secret, the channel for learning about trading and investing. Welcome to new episode of Markets Tomorrow, the daily market analysis. So we look at what happened in the markets today and then how we can plan for a better trade tomorrow. So what a day today was, right? It was a bull trap sell-off that happened, but despite 200 points down, the Nifty banking index was not hit. It's the highlight of the day, right? So as usual, we'll be doing this for January 19th, Wednesday 2022, and that's tomorrow. So without wasting time, let's get into and see the analysis. So this is the pre-market analysis for Jan 19th, Wednesday, tomorrow, as I said earlier, and we'll be looking at all of these parameters on the charts we'll be seeing. In addition to that, we will be looking at the data analysis on all of these parameters as well, and then we'll wrap up with some actionables, right? So look at the candle, today's candle, right? This is clear bearishness that you're seeing, right? It's clear a reversal pattern, right? This is something that we have to be cautious. Just look at the range of the candle. It's wide range bearish candle, and here also, and it's also bull trap in the Nifty. Bull trap is like the price has gone above the previous day's close and then it closed below the high of the previous candle. So similarly here the price has gone above the previous candle's high and then closed below the high of the previous candle. So, and also this is a hammer pattern. Hammer is a pattern where it could indicate a reversal in the trend, but here you have to see that Bank Nifty was on a slight downtrend and then a hammer means it could be a reversal to the upside, you know, if it works out, right? Yesterday we had been very bullish on the market, but that's based on the momentum, trend, volatility, and the price patterns. All indicated with no PCR, even the opponent's data, all indicated bullishness in Nifty. But this is what happens, right? We have to take it with a pinch of salt, you know, as the market gives. You know, that's the way market behaves. And Bank Nifty was about a point where Bank Nifty was having a gravestone doji, which usually indicates a bearishness, but this is not real bearishness. That real bearishness has actually come on the Nifty index and not on the Bank Nifty index, you know. So that is contrary to what the analysis happened. This happens. So all we can, as a technical analyst, all we can do is to anticipate certain moves based on the probability of that is based on the price patterns and different indicators, basically based on the price, historical price, but it's not mandatory that it happens exactly the same way. Like we had been very bullish on the market on the index, and we had been slightly bearish on the bank index, but it happened the other way today, right? So it dropped 195 points and 1% drop, and it's a bull trap and it's a wide range bearish candle, and it has taken a previous support. This is a gap here, so it has taken the gap support. So the gap is behaving as a strong support here on the Nifty. And Bank Nifty, the thing is that it has lost only 6 points if we consider it with the previous day's close, right? So it's only 6 points despite all the drama that has happened, and it formed an inverted handle, and also that also gapped up in the morning just like Nifty, and then it ended up as a bull trap. So intraday, if you see, it was highly volatile in both the indexes. It gapped up and then it trapped the bulls, and then everything was given off, and big sell-off happened in the last 1 hour. That was definitely institutional selling that happened, right? Now volatility expansion, if you see in the Bollinger Bands. So this is the inter before going into the Bollinger Bands. This is the price action that happened. Look at this. It moved up around 40 points and then gave up 165 points, and then it moved up 131 points, and we're talking about Nifty, and then it gave up 232 points. So that's the kind of volatility that we saw in the markets today. In the Bank Nifty, if you see, similar pattern, right? It moved up 222 points and gave up 200 points and then shot up 588 points and then fall down 750 points. Huge volatility was foreseen. 6% of weeks shot up, right? That was the intraday price action that we saw. The Bollinger Bands, if you see, the volatility expands, we can still be seen on both the upper and the lower bands. The upper side where the price was moving on the bands has now come off, and the candle is moved slightly away from the bands, right? And the outright expansion is halted for a day, you can say. That's exactly the same thing, technically, but with less bearishness. So overall, Bollinger Bands still continue to show that the price expansion can happen on the upper side, but as long as it is expanding, these kind of moves are more likely, right? Because that means that the distance from the standard deviation median to the upper band, or from median to lower band, as long as it is wide, it is going to big, 200, 300 points moves of can frequently be observed. Now, the main thing is support and resistance. So now, right now, it's at a support zone. The price action on the Nifty, you can see that it is at 18,100. It's a gap support. The gaps are very powerful, right? Window gaps are very, gaps are powerful in the sense that it can give, if it's very difficult to break that and go. Once it is gone down, means it can go for a longer time. That's what historically it shows. So look at the candle size. It is exactly hit the resistance that is there at 18,350 400 band, and then it exactly fallen off from the support at 18,200, has broken, and 1800 it has taken the support. Now support down below, if that is broken, is back to 18,000, and after that you have 17,800, 850, and then you have 17,500, 600. That's the supports on the Nifty. Upside you have the all-time high 1860. If the 17,400, the 18,400, 18,350, that band is taken off. Now the bank Nifty, if you see, you can see that the price that is support 38,000 and 30,100, and after, if that's what it has taken support now, and if that's broken, then you have 37,800, 700 band, and if that is also broken, then you have 37,300, 37,400, which is a Fibonacci 23 retracement level. And after that you have the 36,900, 37,000 is the support below. Similarly, in the upside, the resistance is 38,939%, rounding number. That shows the major resistance is going to come after that. After that, you have 39,300, 500 range, and then after that, you have 40,000 kind of rounding number level. So that's the resistance on the upside, and it's support. Nothing much has changed. The price has moved between the marked resistance and support levels on both the indices. That's exactly what happened. But so that's why these markings are very important for entry and exit, and pyramiding or whatever you do. Support and resistance levels marking is very key, and you need to do it with different techniques that is available, like Fibonacci or trend lines, or simple price support resistance markings or pivots, or it can be any method, or moving averages. But the more precise that markings comes in, the better you can trade with my technical analysis, basically, right? So yeah, so moving to the momentum and divergence, there are no divergence as of now. But the thing is, the momentum is still bullish in short term on the Nifty and the Bank Nifty. On the medium term, Bank Nifty is lagging behind to become bullish. But otherwise, medium term, Nifty is already bullish. It continues to be bullish because it's a weekly candle. So bullishness is still there, and the trend indicators are showing that nothing as much has happened. The trend is still DMI positive, but there is a band that has happened on the strength of the trend, right? That indicates there is a slowdown in the bullishness. That's what, minus slowdown. That's all. Bank Nifty same case, DMI positive. So with regard to the trend, as for the ADX indicators are showing, the strength might have decreased, or it may not be rising now. It has taken a bend. It may be down. It may have weakened. The strength of the trend might have weakened, but definitely the medium term and the short term, the daily and the weekly, has got the trend still in the bull zones. Nothing has happened out there. Coming to the volatility, you can see that today it was a spike, 6% shot up certainly, and now just settled 17.78, and implied volatility if you see 16.65, and IV percentile is in a 66 levels percentage, 62.2, 66.2 percentage. So what you saw is the spike, but it's well within the range of the 15 and 20, right? So that's where it has been for several months now, the volatility range. So what about knowing this, right? So knowing this is important because when it is going beyond the range that we have defined between 15 and 20, then you need to be very watchful. We may not be able to afford the the kind of price moves that happens. Stop loss. free trades and all the things can happen when it goes beyond the 20s. So better to stay away at that level. Similarly, when price is at a higher point, there is a mean reversion that can happen, which can turn the price backwards down. Right. So that can also be anticipated now that the price has spiked up, but now it's at the midway between the 15 and the 21. So it's difficult to predict whether it goes up or down based on the volatility. But otherwise, if it is at a range top, we could expect a mean reversion kind of thing. So that's where the volatility comes into picture. Now moving to the open interest analysis, what we see here is that 17,500 was for some reason a major put writing for the next expiry of Jan 20 that was seen from the beginning. I was wondering why was that, and the reason came clearer today. Even when the market was 18,300 plus level closed, still the put writing highs were seen at 17,500. But now today it has come down. The highest put writing after 17,500, which continues to be the highest place. Now we have 18,000 has got good put writing. Similarly, on the resistance side, it's 18,300 that continues to be a major resistance that would now yesterday that is where the market closed. But now this becomes the highest put rating for. You never know. You have more days. Tomorrow is only Wednesday, and you have 2 more days for the expiry. So it could change still. But as of today, it's 18,300. There's the highest resistance is seen, and after that 18,400. Now the thing is, it was bullish 1.1 or something in the put call ratio for the Nifty, but today you see that it's 0.59, which is nowhere near to the bullishness that we had yesterday. And it's a short build on the futures option strategy that you see on the open on the Nifty. Well, look at Bank Nifty, 38,000 and is where the highest put rating is there, and 37,500 after that. 39,000 is where the highest call rating and resistance is in, and 38,500. So the 1,000 point range still continues to be. So opponent is also showing that there is not that much of bearishness that is seen in the Bank Nifty as compared to the Nifty. 0.77 is much better PCR put call ratio as compared to the Nifty, and the thing is that futures trading the Bank Nifty was showing a short build up, the same as the Nifty that happened today, right? Even though only 6 points have got lost, it was the open interest data wise, the short build up is what happened, right, on the Bank Nifty. That's about the open interest analysis. You'll have to correlate the open interest data with the chart levels that we have seen, and then come out to a markings, and then accordingly put your trajectories or swing or position, whatever it is, right? Look at the heat map of today, it's spread all over, and all of this, most of this, it was half redness was seen. It was more greenery in the morning, but by the end of the day, the last 1 hour selling is what made this in this situation. But still, you see that the banks are doing good. The HDFC, the major bank, and ICICI are green, and Axis Bank also is greener, which gives a hopes that banks could save. Sectoral performance, if you see, the IT went down 2% today. Almost all of everything went down. What I never know. Metal went 2.25% down. Auto went down 2.5% down. Pharma closed 1.2% down. FMCG 1.2% down. Reality is 2.5% down. So the short-term momentum continued to be bullish only in the auto sector. Otherwise, IT also has given up the short-term momentum to the sideways. Metal gave up the sideways. Auto remains bullish in the short term and the medium term. And the stock picks could confidently pick up only from the auto sector. Other sectors are all. Other two sectors which were seemingly bullish is IT and metal, which is no longer if you are a momentum based trade. Pharma, FMCG and reality stay away until the momentum catches up. That's the sectoral industrial analysis. Look at the institutional participation that you see here. 1,254 crores of selling has happened in the cash market from the FIs and DIS, who normally come out and buy at these situations, has also sold lightly, did not come in as a savior today. That's exactly what happened. So the institutional participation lacking is a concern. Here a lot of action is happening. The Fed tapering news is coming. The interest rates and bond rates are getting increased. That means people will pull out money from the stock markets in the US mother market, and that could impact the money flow into our markets as well. That is exactly what Fed tapering is all about. So you can clearly see that the dollar is strengthening. Dollar would strengthen when when the interest rates for the people would rather invest in a bond or a bank deposit when the interest rates are high there as compared to the stock market. So This can be seen in the price action of the dollar index. Dollar index has been moving upside back after a fall off, and similarly the price also, which had gone below the 74 levels and is now spiking back towards the USD INR currency pair we're talking about. Right? Both dollar index and USD INR is shooting up, and that indicates the rupee is weakening. Once again, going towards the 75 kind of levels looks like. No, another bad thing apart from the rupee weakening is that the crude oil is making historic highs. Now it is like 84.2 kind of levels. So this is crazy. Gold at the same time is facing severe resistance, 1830, 1850, that kind of range, where it is attempting to. Normally, when the dollar behaves like this, and crude behaves like this, gold used to move, but it is attempting to do that, but nothing is happening, and it remains in the sideways zone. It is also facing resistance whenever it try to move above this channel top or beyond that. Or this time it's not even going near the channel top also. Now globally there was a big sell-off, and it was you can see that the Dow Jones was 200 points down today. It's not open. This is old data, and the other indices also are showing some red. And globally, Europe markets in the afternoon, the futures in Dow Jones and other US market futures are all showing red today, and there has to be something to do with that reflecting our markets as well. Now, two actionables. One is TCS, and we had TCS in the yesterday's long list, long stocks list also, but it didn't work out, and you can see that it didn't work out in the sense the trade never came through. Like not the price never moved above the previous or the entry or the allowed candles high, and so it was a red day. But there could be a chance that it can break out the next coming days. You never know when it happens. So the trade is still valid, but the entry signal has not come in today. So that's bullish. Reasons are the same. The volumes are good. The price pattern is a rounding pattern breakout zone. There's every potential to move out. The momentum is great and trend is great, and it is in the channel, and it's somewhere mid of the channel and gives a good risk reward. So TCS, yes, IT is one of the performance sectors. Now ICICI Bank is doing good. That's another pick. There is a divergence. That's a bullish reverse divergence, um, which can move further up, and it's in the channel, and yeah, bank index also doing good. So one pick from the IT and one pick from the bank. This is two actionables. Now coming to wrapping up the session, it's cautious, mild bullishness is what my view is for the short term. That's for tomorrow. So mild bullish reasons, obviously the support resistance levels that you see, the momentum that you see bullishness continues, the trend that you see bullishness continues. The only worry point that makes it wild and mild and cautious is because institutional selling is gaining the pace, and today's price action of big sell-off in the last 1 hour. That's really concern. It shows bull trap price actions today. Bank Nifty is, the strength that is seen. If it sustains, there is nothing to worry, right? So that's a positive part of it. And the domestic institution not coming for the rescue and not even buying is another concern. Another cause of worry. Global markets sell off. Red continuing is also part of that worry, right? So that's why it's cautious, and that's why it's mild bullishness, right? Now the last two paragraphs is a repetition what I do every day. It's for the option based strategies, that is based on the VIX or based on the volatility primarily. So VIX is mainly in the 1521 levels, right? It's somewhere in the mid, so you can't predict anything, and you have to be cautious if it goes about 20. And the volatility is huge. You can see that how the market moves in Nifty and on both the indexes it was heavily volatile. So this can always happen. Keep the type stop losses or go for hedge positions, right? There is no Fed tapering and the COVID kind of news are floating around, so sudden reversals can happen. Profit bookings can take place anytime. So position sizing is where you have to be, rather than staying out of the market. Right? Position size well, depending on how the market is moving, and do the pyramiding upside or a downside. Right? That way, if you position size, you can still play the game. So yeah, inter strategies always has to be vertical spreads is ideal if you're carrying forward the trade, not entirely. Vertical spread helps you to define your strategies ahead of time. You know what you will be losing, right? So that's a summary wrap up of what my view is. Cautious, mild bullishness in the short term because it's still momentum and trend wise bullish, right? All the price action had a bad day today, right? So I hope it helps you to form your view in some way, and if that helps you, then consider hitting the like button and share it to friends and colleagues. Thanks for watching. Happy trading, happy learning. Bye.